China's taking over? In a previous video, I explained how the Middle East and the three choke points of the trade lane passing in the region were under threat. The Suez Canal in Egypt, the Bab al-Mandeb Strait near Yemen, especially in the news, and the Hormuz Strait near Iran. I also explained how the expansion of the BRICS alliance to include Iran, Saudi Arabia, the United Arab Emirates, Egypt and Ethiopia was a pretty big deal, as it includes all the countries with a say about those three trading choke points. But how did this happen? How did China attract the entire region to its side? And what can it mean for the petrodollar? Fading American influence. For a very long time, especially since the fall of the Soviet Union, the Middle East was seen as mostly under American influence or even direct control. This was even more true after the invasion and occupation of Iraq. In the mid-2000s, there were American troops in Iraq, strong ties with Egypt, Israel, Saudi Arabia, Kuwait, the UAE, and so on. And even with a partial withdrawal of troops from Iraq, the US remained the most powerful actor in the region. While this military influence of the US was undeniable, its economic influence in the Middle East was already declining in favor of China. This can be easily illustrated by the size of Saudi Arabia's trade with China. In 2001, Saudi trade with China was just 10% of its trade with the USA. In 2011, China went above the US in bilateral trade value with Saudi Arabia. In 2016, China Sinopec and Saudi Arabia Aramco agreed to joint build a refinery worth $10 billion. In 2018, Saudi trade with China became larger than the one with the whole of the EU. In 2020, the Saudi trade with the USA and the EU combined was smaller than the trade with China alone. China's new friends. The evolution of China's importance with oil exporting nation in the Middle East was even more pronounced when it comes to Iran. In 2021, China finished signing a $400 billion agreement for a 25-year-long deal with Iran, also called the Iran-China 25 Years Cooperation Program. It included Chinese investment in oil and gas, but also industry, tourism, information technology and communication. For example, UAE is building Iran's 5G network. Deepwater Harbor, high-speed railroad are also built by Chinese corporations. In exchange, China got deeply discounted oil and gas supply from Iran, usually 15 to 25% cheaper than market price. There are also intelligence sharing agreements and the officially denied but likely authorized presence of up to 5,000 Chinese security force on Iranian soil, as well as joint training and shared military research and development. As a result, China's independent refiners, the so-called teapot refiner, have been buying Iranian oil at a $17 per barrel discount to comparable quality Oman crude. And China is not limiting itself to Iran, with plenty of other activities thanks to the investment juggernaut that is a Belt and Road initiative, formerly known as the Silk Road 2.0, which is now an investment program that is being counted in trillions of dollars. A bear in the desert. While this video is focused on China, a brief tangent about Russia is needed. This is because Russia's actions are aligned with the Chinese goal of reducing the reach of US influence in the region. Far before the war in Ukraine, Russia was already at odds with the USA over Syria. One of Russia's only allies in the Middle East and providing Russia with a military base in Tartus, Bashar al-Assad's survival stems solely from the support of Russian Air Force and Wagner mercenary, together with support of Iran, of course. And you can see the map from 2015 with how little the Syrian government controlled of its own territory at one point. In many ways, this was a proxy war between Iran and Russia supporting Syria versus the US and Saudi Arabia supporting the rebels. This conflict and the proximity of China and Russia to Iran limited their reach with the Arab country. something that changed recently, we'll come back to this. And the relation between Russia and Iran have only deepened since. For example, Iran supplied cheap suicide drones to Russia for attack in Ukraine. Russia provided Sukhoi 35 fighter jet, Mi-28 attack helicopter and Yak-130 pilot training aircraft to Iran. And the development of the North-South corridor allowing direct trade between Russia, Iran and India, bypassing all the choke points of the Middle East. And finally, Russia is now saying on December 12, 2023, that it's working on a major new agreement with Iran, likely including economic and military collaboration. Iraq is a case study of changing influence. Another good example of the collaboration between Russia, Iran and China is in Iraq. Despite its invasion by US forces, the country is widely viewed today as having fallen under the control of Iran. But this also comes with a lot of business deals with Russia and China, which have progressively expelled Western oil companies from the country. For Russia, it is mostly Lukoil that is taking over the field in development in Iraq, like the Eridu field with at least 10 billion barrels of reserve, or the Kwarna 2 oil field with 43 billion barrels of reserve. China is active through its national oil companies, Sinopec, China National Petroleum Corporation or CNPC, and China National Offshore Oil Corporation, CNOOC. They are active on the Kwarna 1 oil field, left by Exxon, and in general, half of Iraqi oil comes from fields where Chinese companies are operating. A lot of these deals are a result of the Belt and Road initiative. What changed recently over the last few months is that Saudi Arabia and Iran have officially stopped fighting each other through proxy wars in Syria and Yemen. And that was achieved by Chinese diplomatic efforts. What was in March 2023 hailed as a massive push for peace in the Middle East might have been something else entirely within sight. By freeing Iran from the pressure of the proxy war with Saudi Arabia and the UAE, it allowed it to further stretch the American military supply through the ongoing war in Israel triggered by Hamas, with the benediction of Iran most likely. Something definitely to the advantage of China and even more Russia. I mentioned at the beginning of this video the integration into the BRICS of Iran, Saudi Arabia, the United Arab Emirates, Egypt and Ethiopia. Together, these countries represent directly or indirectly all the major players in each of the three Arabian Peninsula choke points. Egypt controls the Suez Canal, Ethiopia does not directly control the Bab el-Mandeb Strait but is active in the region. The other strong actors, the Yemeni rebel and Yemen government, are respectively backed by Iran and Saudi Arabia. And finally, Iran, Saudi Arabia and the UAE are the major players in the Gulf of Hormuz. So when everybody joins the same trading and diplomatic alliance at once, which is essentially centered around China, this should raise quite a few eyebrows. Losing the Saudis. Now, how did this happen? Well, first we need to rewind a bit the US-Saudi relations. In essence, the deal since the end of World War II is that the US protects Saudi independence and its control over the oil field and the holy site of Islam. In exchange, the Saudis accept only dollars for oil and recycle this dollar revenue into US weapon, US bond and US made goods. The problem is what happened when the US become a major oil exporter and therefore not a client but a competitor of the Saudi. With the shale revolution, the US have greatly lost influence with Saudi Arabia. Alone, this would not have been enough, but it also just happened that a new superpower has risen at the same time. So, with China progressively becoming a more important trade partner for Saudi Arabia than the US and Europe combined, it was probably only a matter of time before the alliance started switching. Still, it would have taken a lot longer if not for repeated blunders by US diplomacy. The first step was the oil trade war in 2016, when Saudi Arabia tried to kill US shale oil production, only to find out that unlimited capital could keep US shale solvent longer than an entire country dependent on oil revenues. Yes, shale producers were losing money, a lot of money. So what, this charade would go on for another 4 years. For the record, I was myself betting against US shale 2 years later with no better result. My portfolio and my pride still hurt from it. But anyway. The second more serious misstep was the very undiplomatic ability of Donald Trump, threatening in 2020 to, I quote, "You cut oil supply or lose US military support." Pretty straightforward. Considering the poor result of the Saudi army in Yemen, I suspect its rulers were more than a little nervous at the idea of facing Iran alone. And on top of the possible withdrawal of American defense, the question of the efficiency of the defense systems present also came to light when Yemeni rebels, the Houthi, managed to strike Saudi oil facility with relatively primitive drones. The Patriot system, a very expensive one, with each missile costing $1 million, failed to intercept these drones. And then, after the Trump era blunt approach, came the generally directionless and hapless Biden administration diplomacy. Starting from even before his election, as Biden promised during his campaign to antagonize Saudi Arabia and make it a pariah. It was followed by the short-sighted tentative to use the Strategic Petroleum Reserve, or SPR, to push oil price down, an initiative which deeply angered the Saudis. And the picture would not be sufficient without some level of political signaling being pushed on the ultra-conservative Islamic monarchy. It might feel virtuous, but I'm sure not going to be efficient diplomatically to lecture, apparently in every conversation, the Saudis about sexual minorities. So we are now in the first consequence of the Israel-Hamas war in Gaza. But for sure, the anger of the Muslim street over the possible mass deportation of 2 million Palestinians give little room or appetite for the Saudi royals, officially titled Guardian of Islam, to get back to closer relation with the West. Ongoing de-dollarization. A lot of the dollar power as a reserve currency after the end of the gold convertibility in the 70s have been built on two pillars: military and political influence, with tentative to de-dollarize ending famously bad for Gaddafi and Saddam Hussein. And in second, the Petrodollar is a system in which Middle Eastern producers require oil buyers to pay them in dollar. And these dollars are recycled into the Western financial system. The Petrodollar itself being supported by a promise of military protection to the Arab countries. As everybody on earth has to own dollar to buy oil from the Middle East, it made it a natural exchange currency for also non-oil trade as well. While the most important actor in the Middle East beside Iran is Saudi Arabia, it is often the smaller state that makes the first move in any sort of change. This allows us to test the water and forewarn a future incoming change. The UAE in particular seems to be preparing for some change anytime soon, with a decision to prioritize local currencies over the US dollar in new oil deal, announced in November 20th, 2003. This also comes right after the announcement of a new $7 billion currency swap deal between Saudi Riyal and the Chinese Yuan on 20th November 2023. China's goals. So that's a bit a lot to digest. Let's do a small recap. Iran is essentially allied with Russia in opposition to the US and in a deep strategic partnership with China. Saudi Arabia and the other Arab states seems to be turning toward China as the country is now their main client for oil and gas purchases. The BRICS alliance expansion is essentially taking over the strategic strong point in the Middle East, as well as most of the oil reserve of the world. And the war in Israel is forcing Muslim states to oppose Western policy or risk domestic revolutions. This is overall a win for China, as it matches its long-term objectives. First, securing energy supply, and more importantly, avoiding a Shia-Sunni a conflict that would devastate the Persian Gulf and destroy oil production. Getting that oil at a discount from Iran is an extra bonus to give the Chinese economy a competitive edge. Secondly, opening new markets for China's industrial giants. Not only the oil company, but also firms in construction, telecom, tech, automobile, and so on. And lastly, reducing the US influence in the Middle East, while not getting entangled in local conflict. If possible, it should see in the medium term the US lose its military base in Iraq and Syria, which are already under heavy pressure from local insurgency and missile attack supported by Iran. And in the long term, China would even like to see the US military bases in the Persian Gulf closed or at least reduced in size, making any large-scale intervention in the region impossible. For now, this goal and this plan seems pretty well underway. I would conclude by saying that if it come to pass, it would have major consequences. First, it will give the China-centered New World Order tremendous influence over India and Europe, which are both highly dependent on energy supply and import from the Middle East. This is especially true for Europe, as they are already cut from Russian supply for now, and likely permanently from cheap Russian supply. Another consequence will be the likely resurgence of political and militant Islam. Not in the form of some fringe terrorist group like ISIS, but in the form of one or several stronger expansionist empires, reminiscent of Persia, the Ottoman, or the Caliphate. At least as long as the oil revenues last. The exact shape it will take is still unclear, but for now the likely contender is Iran, as Saudi Arabia is losing prestige over Iran's hostile position against Israel. Turkey could be a candidate as well, but as for now try to play all sides, and is ending up antagonizing everyone. The lasting fracture and division between Sunni and Shia is the main argument against the idea of a unified Islam. Would this division persist too strongly? As soon as the opposition to Israel or the West will be insufficient to unify the Muslim world, it could fracture again independently of what China or any other actor would prefer to see. US pushback? The question hanging over the Middle East right now is how will the US push back against this loss of influence? There is no single solution, but quite a few things could be done to improve the situation for the US. First, developing better air defense that is cost-effective against cheap drones, so that both Israel and the Saudi can feel the US military protection is actually working. Secondly, ramping up production of cheap weapon systems like artillery shell and drones, demonstrating that the US can keep up with Russia and Iran, something the war in Ukraine have put into question. Then, better handling of US oil production growth, so to not so much antagonize OPEC. And lastly, overall a better diplomatic strategy, including long-term focus and no empty threat, as well as pushing less of the so-called woke issue on the ultra-conservative Islamic monarchies. Together, these measures could restore the confidence of the Saudi in American protection, and that the country is serious about keeping its influence in the Middle East. The internal political will in the US to do those changes is another question. The alternative could see the US forced to depend exclusively on Israel as a local power relay, and would greatly reduce its ability to fight against Chinese and Iranian influence in the region. So that's it. China, managing or not to take over the role of the US in the Middle East, will have massive ramifications, and probably determine in large part the structure of the 21st century world order. If you like this content, please subscribe to the channel and consider subscribing to my Substack newsletter, link in the video description. I publish a free article approximately once per week and a premium report once per month. Until next time, stay safe, stay informed.